Morning, everybody. It's the 25th of September. It's a Friday. We're Signal Centre talking ball. I'm Joe Neighbour, joined by Ian Coleman and Steve O'Hare. Good morning, guys.
Morning all.
Good morning.
We made it.
Yeah,
Yay!
end of another
Another
week.
It's been a little bit more promising in terms of price action, I think.
Yeah. It's setting ourselves up for October, our Oktoberfest that we have. We normally do really well in October, don't we?
It's normally a pretty good month for the signals, yes. So let's hope we can get off to a good start. Well, we're ending the month on a good finish anyway. T-Ball with his dollar Troy trade this morning hit target in about 10 minutes, I think.
Yeah.
Yep.
That is once that market moves, it doesn't stop, does it? It's
No, it doesn't.
Definitely a buy or sell or break market.
Absolutely. So off to a decent start this morning. In terms of news overnight, obviously more worries about COVID-19 infections and further restrictions that could possibly be put in place as a result of an increase in infections. Hospitals in Madrid apparently are filling up with seriously ill patients again, and the UK yesterday reported its highest number of new coronavirus cases in a single day since the start of the pandemic. So that's obviously having a dragging effect on indices. They looked as though they could have had a bit of a bounce yesterday, but it was a bit muted. But on the other side of that, we've got the US talking about another whopper of a stimulus package, talking about $2.4 trillion worth of stimulus. So I mean, that's just obviously incomprehensible amount of money, but we're seeing dollar weaken a touch off of that a little bit. I'm sure Ian will show us some charts shortly about what impact that's having, and obviously what knock-on effect onto other markets that's having as well. So should we get stuck into some charts?
Yeah, why not? I could have a look at the indices first if you want.
Yeah, go for it.
And one of the things I do think as well with this stimulus pack, and you see it a lot in charts when you sort of look back retrospectively over time. Even though you might get this stimulus pack and it's sort of like you may not see the same sort of price action that we've seen. This is a weekly chart on NASDAQ. And obviously this is the start of stimulus here and it's going all the way up here. Now we're talking about a 2.4 trillion amount.
Which is bigger than the package from before, right?
Yeah. But this won't necessarily mean the equity markets continue to go higher. What you tend to find, if you go back really historically, like when the major events in the world occur, you see that the technicals start to lead rather than sort of like. So I'm not saying it's that we've got a top in place, but I'm saying I don't think we'll get a similar type of move, even though the package is bigger, and so we really got to look at these longer term charts. Once this stimulus package is announced and sort of approved, don't just expect this to be a one-way move higher. You're going to get sort of like people thinking, well, that's it, that's done now, and sort of like forward looking. It's just across the globe, it's all a different story. If you obviously the Hang Seng looks really poor, really sick, and I think this is the real sort of Asia may lead us lower. We've got a sort of a flag forming on the China 50, and we're still sort of at elevated levels in the Nikkei. The Aussie 200, that's more of a commodity-based type thing. We're still in this channel, and we reacted really nicely from the previous swing low higher yesterday. So a little bit more upward momentum in that. The UK again, this 61.8% fib retracement level has proved too much, and we're on the back foot again. This will be more to do with Brexit and the sterling. And DAX, that's an elevated level. So you see all different countries at different stages in the COVID process, and different stages of the sort of how they're being bailed out. CAC as well under a bit of pressure, just the same as FTSE, but obviously the DAX is working, doing a lot better. SA40 as well as higher levels. But yeah, overall, I think for me that the Hang Seng is the one to really worry about. That won't be getting any sort of $1 trillion package anytime soon. So yeah, that's pretty much it. With actually the one there was one that I really liked the look of, and I thought it was the Hang Seng. Let me just quickly scan. I did it this morning. It was really showing. I thought it was this one, but yeah, it's the 4-hour chart. So it's a little bit more shorter term. And we're seeing this bullish divergence. So sort of like from sort of the 21st, we've seen the momentum really sort of like stalling, although price has moved aggressively lower. So having sort of knocked the Hang Seng quite hard on the weekly chart, I do think we're in for some sort of like small sideways move or uptick in the coming days, just to sort of like correct this bullish divergence.
Okay,
Lovely.
cool. So, Ian, do you want to show us some FX stuff?
Yeah. I mean, dollar CAD's quite interesting. We broke out of a channel formation to the upside. So long-term picture, I think we've sort of completed or potentially completed 5 waves, and we're sort of moving up in a corrective formation, but we have seen 3 weeks now of net gains. We had our bespoke resistance level at 40, it was 134.25, which was just above this 161.8% extension level, and we cut short of that, and we're just seeing a correction lower. I'm just wondering whether or not this is going to continue. Most of the dollar majors look a bit mixed at the moment. I think you've got potential for sort of two-way trades, to be honest. So we've just peaked out yesterday. This is the 8-hour chart. I put it on daily, actually. We've seen signs of indecision. So we've got doji style candles. If you go to euro dollar, and this is what we've been talking about all week, we sort of pushed lower out of a head and shoulders formation, but we're just stalling. That price action is just stalling. There's potential for a retest to this breakout level if we do see some dollar weakness, and the breakout level is at 117.30. And the reason I say that is really using correlation. If we go to euro yen, here we've broken out of a head and shoulders formation to the downside. Medium term bias is still lower. We've got 121.80 as the measured move target, but we've got this fib here, 161.8% fib. So there's potential for a move up just to complete this corrective channel. Fourth waves, as far as Elliott wave is concerned, are normally corrective channel formations or pendants or triangles, but this looks like it's going to tick higher to this channel top. Talking about indices, that was just sort of reiterating what Steve was saying about potential for sort of correction higher. I saw this on when I read the news about the US this morning. I just looked at this on the S&P, and it looks like an ending wedge. So if we get a break of 3291, then the measured move target is up here at 3431. I'm not sure how that plays out on a fib. Pretty close to the 61.8% pullback level. So I think that the scope, and again, this is dollar yen 4-hour chart, decent rally to the upside and just consolidating around this 161.8% fib. So again, I think if we see a move higher in stock indices, then I think this has got good potential to get up here around about 106.35 as euro yen corrects higher, and sterling yen. Talking about cable, that was the trade idea yesterday. We sort of didn't get much out of Rishi, unfortunately. We talked about this was previous resistance now becomes support. That's at 42.46, and we've stalled before that, and this 38.2% fib looks like it's doing the job. And if we go to shorter time frames, this one. Looks like we're broken a triangle formation to the upside, so maybe just coming back to retest before we correct higher, and reflecting that on euro sterling, which we talked about again yesterday. It's a wedge breakout. There's no real indication, I think, that sell-off is coming to an end. I think the prime level, lots of charts, is down here at 90.20. So I think sterling, still potential for sterling strength. I think the dollar's going to be pretty mixed today. and I think we could see a move higher in yen weakness, so a move higher in yen crosses just to correct up the stock indices move higher.
Cool, like it.
Excellent.
Very comprehensive by both of you on that, so thank you very much. Anything else on the charts? I mean, I think you pretty much covered it. There was just maybe something on commodities, but they
Yeah, I was
don't
going to
really
say.
appear to be doing an awful lot, if I'm honest.
No, gold's sort of hanging about, isn't it? It's sort of like, shall I go further? Shall I not?
Yeah, well, waiting on what the dollar does, I guess.
Yeah. But no,
Oil
I'm
just sort of stuck really about just under that gap level that was created back in March, or around $41, somewhere around there. So it's
Yeah.
not really doing an awful lot either.
I think it's sort of like, as we mentioned yesterday on that gold, it's just that yesterday's price action was slightly positive. You see this candle here, a bit of a doji, bit of a maybe a bullish hammer type candle if you sort of like if you're looking at it with your eyes really squinted. But obviously it's going back to this swing low level of the 12th of August around 1865. We've held above it, so I think that's quite key, because on the weekly chart, if we do get a close below there, that's pretty significant. So I think this the bulls will be battling hard to keep this elevated today.
Yeah.
And maybe we'll sort of like be due a little bit of a correction next week. But I've sort of fallen out of love with gold a little bit just in the short term.
Yeah, it's been a bit of very choppy and difficult to trade, I think. And when you've got that sort of strong underlying bullish view with it, it's been a tough to try and play that in the short term.
Yeah, I'm probably going to have a little look at it next week and just try and look for better levels better longer term levels to get along at. You've got the 1665 area here of congestion, all the way down from 1765, but then obviously this 1450 is a going back to the March swing low when things were really bad.
There was something I was looking at on silver, Steve, actually. If you've got a weekly chart up on that, obviously it's seen a fairly lumpy pullback in silver.
Yeah.
But if you got the weekly chart up there?
Yeah, that's weekly.
Yeah, so we look at that key high there. It's sort of coming back for a test there, and it's a 38.2, is it? Or 50%?
That's 50%, yeah, that one.
Yeah.
And that was the $20 level, which we were talking about for a very long time, because we had this significant swing high going back to July 16. And then we got up, tried to test the $20, failed, and then had this really serious move down.
I mean, obviously, even further back, if you go back to June 2016, there's the previous high there, which could potentially act as a support on the way down.
Well, maybe that's what I'll do. Instead of analysing gold, maybe I'll have a look at silver, because I definitely think that it is underperforming. If you look at, that's a snapshot of silver in the same time frame. You look at a snapshot of gold, it looks like a completely different product. And well, it is a completely different product. It looks like these track each other historically over time very, very closely, and that doesn't say that it tracks each other. So there's still, I think there's still much more potential in silver than gold over the longer term.
Yeah, I mean, I do like that. Look at that level there between sort of 20.75 to 21.15. I think there could be some.
Yeah, that's it. Think about it. So that is probably more of the the real sort of longer term idea.
Yeah, cool. Okay, let's have a look at the gun to the head stuff yesterday then. It was a pretty flat day all in all. Share my screen. So 3 trades that we had yesterday, who can remember what they did?
I sold gold. Looked all right a minute.
Yeah, so stopped on gold. It just sort of didn't follow through. Did it to the downside after initial break lower. Cable we bought, which we were 15 ticks on side with at 9 o'clock for a 0.15 R return. And the CAC, I bought that and I was down by 1/4 of an R or 16 ticks at the 9 o'clock close. So pretty boring all in all. Not much movement for myself and Ian. Let's have another look today. Close the week out on a high if we can. Anybody got anything?
Yeah, I'm going to go for that S&P.
There we go.
3251. Getting long, obviously. targeting that that wedge level 3431 with a 40 tick stop, so near the low, 4.5R. So looking for this wedge breakout basically. So getting long at 3251, stop at 3211, targeting 3431.
Great stuff. Steve?
Pass.
Okay, I'm looking at Swiss franc, Japanese yen, which is not a market I tend to spend too much time looking at, but just having a flick through the charts today, something caught my eye. This is the daily chart to start with, so we've seen a reasonable correction take place over the last few days or so, and we're down, edging towards a 50% fib level. I've also got a bespoke support there at 113.65, which we've just touched this morning. So that's the daily chart, but on the intraday chart, particularly the hourly chart, what's really caught my eye, we've got a really big bullish reversal candle that's formed there, in line with those that support level that I highlighted on the daily chart. So a nice chunky move higher. Going to look for that to continue up towards a 38.2% retracement of this swing move. I'm going to put my target actually at 114.85, so it's a little bit in front of that, just because I think it might be a bit ambitious to go much higher than that. Going to have a stop loss of 32 ticks at 113.53, buying now at 113.84, which would be 3.14R, 3.26R, sorry, if it were to play out from here.
Good luck.
Let's see. Steve, did I give you enough time?
Not really. No. Did you do S&P?
Yeah.
You were buying it, weren't you?
Yeah.
I might hedge our bets. Only just because I've just scanned through, and that's the. It's just the momentum slowing. Will we get this follow through on the hourly? I don't know. Maybe I'll go down. Let's go down. That should be fun. But I'll be ultra aggressive with it as well. So I'm looking to sell
For a
down.
change.
Yeah. Sell down 26,868. How aggressive can I be? 27,008. 18. 15. No, that's not aggressive enough, is it? 26, 9, 6, 8. Yeah, and then we'll go for a 3 to 1. 3 to 1. So my stop on that will be above the hourly high at 26,968. So 100 tick stop, 300 tick target, 26,568, which will be back down to the low of the day. Just this momentum stalling. So let's have a go to the downside, especially if they're announcing these huge stimulus packages. Why not?
Okay.
I'd like to say good luck, but I won't.
No.
Yeah. Well, no, Dow could come off, S&Ps could go up. They've got different components, so we could both be winner, chicken dinner. I doubt it very much.
Okay, so they're the trades for today. Steve selling Dow, Ian buying S&P, and I'm buying Swiss franc, Japanese yen. Good luck if you're going to have a stab at any of those. And yeah, good luck, guys, on your trades. May the best man win.
Got to be in it to win it.
No, you're not necessarily the best man. I don't care who wins.
May a man win.
As long as it's me. All right.
Any news later today that we should be expecting? US durable goods orders at 130, forecast to rise by 1.5% month on month from 11.2% last month. Anything else that you guys have seen that we should be looking out for? We had a consumer confidence reading for the UK this morning. Anybody seen?
Have a quick look. I don't know, Jeff.
Is there?
No, not for Eurozone.
For who?
I don't know. Was he sent off, Jeff? No.
Italy. Italian consumer confidence.
UK data seen improved. GfK consumer confidence reading.
No.
I don't know, Jeff.
Okay, never mind. Yeah, so that's pretty much it. So I hope you've all had a good week. If you've been trading into, well, last few days of September next week, and then we're into October, so that's generally a pretty decent time for volatility and markets improving. So let's catch up next week.
Yeah.
Indeed.
Cheers.
Have a
Have a
good
good
one.
one.
Toodaloo.
Cheers,
Bye
guys.
bye.
Bye.